Determining a perfect conclusion about Cardano ADA is considered a Herculean task in this current market condition. Even the most bullish cryptocurrency advocates realize that this would be quite arduous. And the recent economic downturns have swallowed up every seeming chance for Cardano ADA to rise. So to stay realistic, it is wise to compare the trajectory of the ADA price to the leading cryptocurrency, Bitcoin. Bitcoin began trading in 2010 as the foremost Bitcoin exchange opened in March of 2010 with a per coin value of 0.3 of a cent. The first real-world transaction took place in May of 2010 when 10,000 Bitcoins were exchanged for 2 pizzas in Florida. Since then, it has been caught up in the cold hands of a wild ride. The first spike in Bitcoin occurred in July of 2010 when the price jumped tenfold in a 5-day period, from 0.8 of a cent to 8 cents. Bitcoin grew in value in early 2011. The first Bitcoin bubble saw prices soar as high as $31 in July of 2011 before tumbling to a low of $2 later in the year. From December 2011 to April 2013, Bitcoin experienced a major price surge from $2 to a high of $266 before balancing in the $120 range. Now fast forward to 2017, Bitcoin split into digital currencies, Bitcoin and Bitcoin Cash. However, the pattern of Bitcoin in 2013 is quite intriguing. The cryptocurrency was a huge success as investors squealed with excitement as they piled onto the interesting new opportunities that kept buzzing in the mainstream media. The trading was so intense that one of the largest Bitcoin exchanges, Mt. Gox, could not handle the volume. Hackers leveraged this weakness and the whole situation became a mess. Despite the attention Bitcoin was garnering that year, it was a roller coaster ride for the coin. The cryptocurrency was likened to the tail being wagged by a sick dog, but after a summer dominated by relative stability, the coin started to make headlines again. Exploring the stories of investors who embraced Bitcoin in its early days, a certain one is quite impressive. A crypto investor, Ray Tong, stumbled across Bitcoin before most people have even heard of it while working on a college project in 2011. He got his first Bitcoin when it was just $10, and when Bitcoin's price quickly shot up to $30, he was hooked. It sounds kinda crazy, but Tong has not sold any Bitcoin since 2014. At first, it was simply because he was ignorant of how to handle the tax implications of taking profits. But as Bitcoin's potential as a store of wealth emerged over the users, it became a perfect strategy for him. I just kept buying and held off selling, which obviously helped tremendously with the 2017 bubble. So the best trade I've done is probably literally doing nothing, he said. From Tong's story, it is easy to conclude that no matter how good an investor's timing is, it is never going to be perfect. As a Cardano investor, setting price targets is good, but there is no perfect timing to achieve set price targets. One question that is on everyone's mind right now is when Cardano ADA will soar and go upside parabolic, but no one knows for certain. As a matter of fact, there are so many things we don't even know about crypto's future. The least we can depend on is some realistic predictions and invest. Cardano thrives on decentralization, and there's a long list of reasons why decentralization matters, but the main point is that it prohibits anyone or a company from taking control of the network. Nothing is flawless, but decentralization allows for a truly free market and presents great chances for people to benefit themselves without depending on another person. Over the past decade, Bitcoin has reflected the power of working together. Whether you got into cryptocurrency and heard of Bitcoin this year, or since its inception, the reason why you decide to jump on the bandwagon is most likely due to the vulnerabilities of the traditional markets. Every crypto investor wants the same thing, a way out of the cascading problems of the traditional finance. This playing field of cryptocurrencies has seen rapid growth in users. There's an increasing appeal to the bridge from traditional finance and decentralized blockchains like Cardano. Although Ethereum and Bitcoin are far larger in market cap than Cardano, the transaction volume on Cardano has maintained its peak. But why does it matter? Well, transaction volume shows that users are active on the network and the more valued the network is. Remember that it is small bricks that make up a large tower. In a recent summit, the Cardano creator, Charles Hoskinson, argued that Cardano has outgrown its founder, claiming that he started the party and good parties live beyond their hosts. He pointed out salient statistics that prove how decentralized the protocol is. There are over 3 million people, 1,200 projects that are building, Over 100 have launched. 6 billion assets have been issued. The vastness of that activity has nothing to do with me, he said. Going forward, Hoskinson posed the question, how do we really measure things like resilience and decentralization? Then he stated that as part of a partnership with the University of Edinburgh, IOG has started a lab that will create an index to track those metrics. They include how reliant a protocol is on the core entities, the distribution of its currency and its treasury, and the level of decentralization of the consensus. These are all objective metrics, he explained. Cardano's Hoskinson strongly believes that the network is waxing stronger, and he mainly attributes the success to solid fundamentals and deliberate expansions. Back then, many attribute the explosion of Bitcoin's value to China, where there were other forces at work. Bitcoin started to attract the attention from tech and mainstream media, telling stories of Bitcoin millionaires and generating tons of hype that brought Bitcoin in from the chains of the hacker world. A crop of startups such as Coinbase were building wallets, exchanges, and mining machines that made it easier to buy, sell, and trade Bitcoin. Unlike the old Bitcoin, Cardano has a plethora of factors working together to skyrocket its progress. It's just appalling that instead of attracting attention from investors, these factors and catalysts are instigating fear. A community member recently tweeted about the incoming new Cardano algorithmic stablecoin. I thought we've already figured this out. Algorithmic stablecoins are not the best option. Following the new announcement that Cardano is on its way to releasing an algorithmic stablecoin in 2023, there has been mixed reactions among the community members. Various members have expressed deep concern comparing the project to Terra USD, which caused grave losses within the crypto space earlier this year. According to its developers, the stablecoin project JED will be pegged to the US dollar and backed by Cardano ADA. Apart from this, it will be utilizing another token as its reserve coin. The project highlighted that it will be over-collateralized and will have an on-chain proof of reserves. Despite the promises and assurances given by the team of developers, community members are fearful, with some remembering the recently collapsed UST. A community member was seemingly perplexed as to why another algorithmic stablecoin is coming on board despite Terra showing that they could go wrong. The member further stated that algorithmic stablecoins were not the best options. Meanwhile, another user mentioned that they would rather keep using Tether. According to the user, algorithmic stablecoins have already proved their instability. With concerns triggered by the event of JED coming out, there were major questions directed to some of the major stablecoin projects if algorithmic stablecoin projects still have the potential to succeed despite the example shown by Terra USD. Nonetheless, Tether stated that stablecoin projects like Terra had mechanisms designed to achieve stability but failed in the end. Unlike collateralized stablecoins where each coin is fully backed by collateral, algorithmic stablecoins attempt to maintain their value via various market operations that have frequently been broken down dramatically, the team explained. However, USD coin issuer Circle stated that algorithmic stablecoins with complex collateralization structures and technological stabilization mechanisms do not have the same utility value as full reserve regulated dollar assets. The collapse of Terra earlier this year underscored that not all stablecoins are created equal. The Cardano founder is also mindful of potential flaws. He pointed them out after the collapse of Terra USD in May of 2022. And such errors cannot replicate in Cardano, especially in its upcoming development. There are so many conflicting viewpoints from industry experts about Cardano, so nothing is set in stone for its future yet, but it is quite certain that the ADA price complies with the Bitcoin's trend. When you look at cryptocurrencies trading at only a few dollars or cents, it's hard to envisage them becoming the next Bitcoin. Even gallons of faith could not change this opinion. However, it is vital to remember where Bitcoin started. The world's first cryptocurrency was only worth about 8 cents when it debuted in 2010. Indeed, it was a humble beginning. Newer players in the market can follow a similar path, and Cardano ADA is currently reeling with the indications that soaring to Bitcoin's all-time high valuation is indeed possible. But of course, what are your thoughts on this? Let us know down in the comment section below. We'll see you in the next video, but before then, check out our other videos to find out how Cardano is living up to the dream of being the Ethereum killer. And as always, make sure you click on the subscribe and notification buttons.